Welcome to the Trading Lounge, and starting with the S&P 500 here. We've been working in a triangle and we're slowly sort of breaking out of that triangle. In no hurry, of course, and that top trend line there is now being retested as the support. The triangle pattern that we've been working through here can be counted in two ways, in terms of up for one here and back for two here, and then the market working higher from that point. Or secondly, it can be labelled like this as well, in terms of an A, B, C, D and E here in blue, and then working higher through here. Now, I know that the S&P 500 looks a little bit sort of shabby in terms of, strength in pushing higher. And the Dow Jones is a bit like this as well, but it does appear that the Nasdaq is leading, and of course the US earnings too is churning out a variety of results as well. So the market is still in its structure to the upside. It hasn't broken down. Yes, the indicators will look a bit telling you it's a little bit bearish and so forth, but we still need to give it some time above the 2100 here. So while it's above the 2100, we must remain positive on it, because it's the closest largest number, and that means that that's where the support is for this market. The structure from here moving up here is a bit it's not a really nice sort of impulse wave. It's there in terms of structure, but it's not a powerful structure that you would expect coming out of a triangle pattern. So just drilling in here a little bit further, I was looking at this as wave 1 and wave 2, and then looking at this as 5 waves up here for wave 3, and wave 4, which is actually coming back into the price territory of wave 1. But that's okay, I guess, because of the major trend line through here from that triangle thing, and they just tend to do that all the time. So we just need to see if that's going to hold there. So once again, there it is there, but I want to drill into the sort of the intraday part of it. So this is a 15-minute chart. So it's important for us to see what this structure is here. And so far with this market here, let me just catch up here a little bit. So, I mean, I basically wanted to see if the first move down was in 5 waves or 3 waves. And it does appear that it's not quite made a new low here. Let me just double check this for a second. So 1, 2, 3, 4 and 5 for that. That's fine. So that 4 really needs to go here. That 5 nearly goes to here. We'll have to remove that. That will go into here. We would need to just make this, let me just check this here. Just relabel this for a second. Things have moved on since I've seen this last, but I was kind of curious to see what we actually had here. And it does appear that, we'll check with the Dow in a minute, but we've got 1 and 2 here, then 1, 2, 3, 4, 5 for the third wave, which is nice. The fourth wave a bit small, and the fifth wave here. So it is looking in a sense that we have 5 waves down, which is quite bearish. So we could label that an A and a B here, and a C wave up here. I mean, normally they would be pulling back 50 or 60% after 5 waves, which brings us much higher up into this area here. So let's just allow this to play out somewhat here until we've actually got finished. Because if we've got 5 waves down here, for instance, then we get the A, the B and the C, and then we get another 5 waves down here in the same length as this here. So it's not what the bigger picture is telling us, because we would want to find support back on this 15-minute chart. We want to find support here. Let's just have a look at the Dow Jones for a second. This is the 15-minute for the Dow Jones here, and we need to look at its structure to the downside here as well. And just starting from the top here, I mean, it can be an A, B, and a C. That's what we're looking for. I just need to check the cash market here. I'm just going off to the side. I know I don't normally do this. I've normally sort of done my homework a little bit. Just want to check here in detail of what we actually have coming down on the cash market. So far we've got 1, 2, 3, 4. Oh, we've still got an ABC. It's still on the cash market. The good news is that low there is wave C. So basically from here we've basically got, well, an A wave, a B wave, and a C wave down to that point there. So that's a bullish pattern. So as long as that low stays in place, well, for this market anyway, then that I'll go back and check the other one as well. But this would be 1, 2, 3, 4, 5. So it is an A and a B to here and a C to here. So it is looking corrective here. So we should see that not only move up, but move up further from that. It should move up from there. When we have a look at, just going a little bit sideways here, this is basically the NASDAQ or the Tech 100 here, just on the daily chart. I can see that from wave 3, we've got a clean A, B, and C here. And then we've got wave 1, an A and a B and a C here for 2, then up for 1, back for 2, 3. So we're basically at the top of the third wave here of this structure. So we've got up for 1 here, back for 2, and then we're in the third wave, which will be 5 waves up here, and we're just at the top of the third wave here. So we will see a corrective move back into the 4,500 for this tech 100 here. And of course, Apple and so forth, Amazon and all those are leading this one to the upside. So just on the daily chart here, we are long above this line here, but I can see that first of all, I'm not sure if that wave 4 should be here or here. I haven't investigated that enough, but from here we've got wave 1 and 2 here, and then the third wave up here, and in the third wave up here we have 1 and 2 and 3, and the fourth wave coming back to cover that gap, bounce off top of group 1 here, and then move higher from that point. So the NASDAQ is going to lead higher. The other markets are just sluggish. When I look at the Russell 2000 here, they've got the 2000, 5000. I can see that, it's obviously a broader market covering 2000. So I can see that from wave 4 here, we've got a nice wave 1 up here, or even to this point. It doesn't really matter, but it's strong here. And yes, it is climbing here, but it's really struggling. So we've got a top of a third wave in here. We're looking for a fourth. One of the problems here, though, is that wave 3 normally should be the longest in the structure, but wave 1 here is obviously much larger than wave 3 is quite small. That means that wave 5 is going to be even smaller than wave 3. So I could look at it like something like this here. So that will take us, if I took 61.8% of the third wave, because it needs to be small, and that's probably the logical ratio to work with at this stage, then the Russell's just got a move to 1300 roughly, and then so a lot of the small caps are not functioning very well. It's obviously the tech stocks in the NASDAQ that are, the internet stocks that are, carrying the market higher. When we come to the European markets, I might just start with the stock 50 really, because that kind of sums it up quite nicely in a way. And just on the 2-hour chart here, the stock 50, it's got a bit of a bias towards the UK market, I guess, but I don't fully understand all the constituents in this sector, but it does give a reasonable sort of overview of the European markets. And In this case here, we've got, well, first of all, this is a reaction from 3,800. Number 8 is a profit-taking number. It's been hit here. We're looking at it being corrective. It's still... it could still be in its correction because we don't have 5 waves up here yet. We've got 1 and 2 and 3 and looking for 4 here, and this is the same as the DAX, and then up for 5 here to move even higher up through to here, but this is the count I've got so far. So the DAX is very much like that, and this is it here, but it's got a slightly different edge to it where we've got wave 3 over here. We've got an A and a B and a C wave down here. Now this C wave can be counted as also a triangle as well in terms of a C, a D and an E like I just had on the stock 50, but it's not a real concern. What the reality here, to be a useful reality here, would be the 12,000 as support, as a tested support. Now, currently the move up here, like this old high here, is at the 50 and the 61.8 retracement level from the move down here, just above the 12,000. So that's the ceiling on it. So if we, see this market, expect this market to vibrate across the 12,000 and then move above that 61.8, then the balance shifts to the upside as we expect it to, do you know? So to go long here, as I mentioned the other day, we really want that as a tested support in this on this level here. So expect, I've got it up as 1 and 2 here, and I've just counted it as 5 waves down here just to keep it simple, and it doesn't have to be like that, but I don't want to get into a debate about that. It doesn't matter anyway. Both counts lead to the same result. So it's just from this particular low that we're looking for here and trying to count 5 waves up here. But we just have to be careful because this, in reality, this also can be like an A wave, a B wave, and a C wave in 5 waves and fail from there. So that support on that 12,000 is absolutely critical for a safe trade to the upside. And normally when you're looking for, building into a trade that would take these tops out here, is that, yes, we need to see 12,000 as support, and then we need to build on to 12.1 and to 12.2 and to 12.3 and so forth, and we move up from that way. So that's what we're going to be doing. We're going to be looking at doing that, just that. And it's just a little bit early yet. I'm just drilling into the 2-hour chart and just going in a little bit further here now to the 15-minute chart. So we expect some type of, vibration across this 12,000. So perhaps a move to 12.1 and then the A, the B and the C back to 11.9, and then we'd be looking for support over here in one way or another, looking for that tested. We want a new high being taken out. That's what we're looking for. We want a pattern like that. Then we know we got our timing right, because normally we'd trade to a number like this, wait for its correction, wait for it's got support, and then move back into it, because time is money. We don't want to be chopped. You make money in a trend and you give it back in a correction. So the numbers, the price helps us get timing right. So yes, it can push higher from here in wave 5, and sure, that's a trade within itself. That's fine. I'll just check on the 2-minute chart here just to see what we've got. Well, I'm not sure. I don't want to take up your time and do that, but we can get a move. You can use group 1 in here. So 2030, the 3 is always group 1. So tested support on 30 lifts the order flow away from the 12,000, and you'll be looking for new highs at that point. So that's what you need to wait for. While it's under 20 here, then it's still locked into this number here. The 20 is the pivot within group 1. So if that became the support, then you sort of like, your ears prick up and you're kind of looking for the setup then. But until that happens, that's a no-go there. And yeah, the FTSE's a little bit messier actually. What we have done though is we've counted 5 waves up from wave 4 here in terms of 1, 2, 3, 4, 5. We did all that. That was all fine. We got here. There's also an alternative top being in here as well. As wave 5, I don't think it's the case, but we need to just have it there for a second, because this move down through here as wave A here is in 3 waves, so we should make a new high above here. So, but I'm just going to leave it there for a while. Now, the counts here, first of all, after 5 waves up, the 50-60% retracement levels here. So I always thought that it was logical to put this one here and this one here, and then this would be the A wave, the B wave in 3 waves here, such as an A and a B and a C wave here, and then 5 waves here for wave 2 to come into play, then up from that point. I know that large numbers like 7,000 can really skew the wave count, so we've got to be a little bit careful. So it is possible that we actually have an A and a B, and if I move this here for a second, wave C here, and then we've gone up for wave 1 and we're looking for wave 2 here, and then up from that point there. So I'm not quite sure which is the right count here. So with that in mind, I was looking at this as well. As you know there, the A wave, the B wave and the C wave there. It's a bit rough, but it fits okay. And then this fits here as 5 waves. So I know that this can be the C wave here, and it could all fail from here. So I guess that if this is the 50 and the 60% retracement level here, so if the market sort of moved, cleanly through that, then you know that we're going to be coming down to, to lower levels of that 50-60% retracement level, closer to the 6,900. But while it stays above 70-50 here, let's just allow it to do this first leg down, back up and then down at this point. So we will know around here what it's looking like. But for any long trade, just put it off for a second, and it would need support on 7-1 here to have that long trade. So just chill out on this one a little bit. And besides, the FTSE is not the one that you'd want to trade long on as well. I mean, it's not lagging at the moment, so it's got no need to catch up. It's 50% that it can be corrective here. So there's too much risk here. It's just not worth it at the moment. The ASX 200, just in the bigger picture here. So from wave 4 here, we've got wave 1 and 2 and wave 3, and we've seen wave 4 complete in an A and a B and a C correction here. And now we're looking for wave 5 to move up. Now wave 5 has moved up. Now we need, normally wave 5 would be, because we've got the extension in wave 3 here, wave 5 here would be the same length as wave 1, or 61.8% of wave 3. Either way, we're looking for 5 waves in wave 5 here. I've always had 62 as a bit of a target, but that's for no particular reason. But here so far, I mean, technically we only need to have 5 waves up and to make a new high above here. In fact, we don't even need to make a new high above here in Elliott terms. All we need is 5 waves. And we basically have 5 waves here, and we'll talk about that in a moment. So it's possible, right, that this wave 5 can be just tucked in here somewhere, and that's the end of it. So that's what I don't know. I feel that we should be having a decent 5 waves up through here, but I'm not sure what's going to drive it. I don't see it coming from the banks, and I've said that before. I thought that it could come from the materials sector. I'm not sure why the materials sector is pushing up, but we caught it all at the right time. We sort of nailed BHP and a couple of others there okay in that sector. We got them at the right time. Now we need them to complete their moves up and retrace, and then we can move back into some of those. So yeah, I mean, the other point too is that, just drilling in here a bit further now, so this is the A, the B and the C here, which would all worked out beautifully. We can see that we've made a new high above here, and we've either got 3 waves up or 5 waves up. But that's not going to matter just yet anyway, because we're working with 6,000 here, and there's going to be some consolidation and corrective price action across that level. So the count is not that essential, but to point out that this wave 5 up here, looking for 5 waves up here, is quite a big trend compared to wave 1. So that's probably a bit optimistic in current times and situations. So we need to be careful that we just don't get 5 waves up here and then that's the top of it. We fade out from that point. I mean, the banks would suggest that, but the material sector is really coming to life a little bit. So this move up through here, it can be counted in 5 waves here, and if that's the case, we'd be looking for a move back to 5.9 here, a bit like the FTSE in a sense. It's also possible that we've just got the top of the 3rd wave up here, but like I mentioned, it doesn't make much difference because the market's not going anywhere because of the 6,000 here. And what we'd been looking for last week, we were looking for the bullish weekly cycle to come into play, and it was all pretty much sort of spot on with Wednesday and Thursday's bear day stuff, and Friday bullish and Monday bullish, and then Tuesday we see profit taking in the morning and then the trend resuming, and the Wednesday's the same as well. It's a bit of a V-shaped day. And then Thursday's the bear day. So we did everything right this last week, but now we're going into all the profit taking stuff in the midweek. So which starts sort of on Tuesday. So today. So you need to be a little bit mindful of that, and you need to make decisions. You've got to say to yourself, well, okay, I don't know much about the bullish weekly cycle, but what do I do? Do I take profit on some of my stuff? Do I take part profit? If I'm going to catch the bigger trend, if this is going to be it up here, then I'll need to accommodate some corrective price action here. And I'm talking about stock as well. I'm talking about BHP. I'm talking about material finance stuff and other sectors and whatnot. So so it is possible that in the move up here that we're just in top of wave 3 here, and we'll move back to 59.50. Here's wave 4, and then wave 5 up here, and then the ABC correction, and then up from there. Or we can have wave 5 in here already as wave 1. So I'll do some more work on that today to try and figure that out. But like I mentioned, it doesn't matter because we're at 6,000 and it's going to correct anyway. There's going to be corrective price action. What you see here is not what you get up here. With a trend, there's a beginning, the building process, then there's the middle when everybody recognizes it's going up, so the volume pours in, then the profit taking. So there's a beginning, middle, and end, and you can see that, and we're at that big number, so it ain't going anywhere, and the count doesn't matter that much. It's going to correct. So now if it's going to correct as a wave 3 here, then we'll pull back to wave 4 of 1 lesser degree. So 59.50 would be basically the target for that. If it's going to be a strong market, then it will just vibrate within group 1 and group 2, which, as you know, would be from 60.30 down to 59.65. That zone there is the corrective zone. So what we need to do is we just, if you've traded up here, great. Then just chill out. Don't do anything because we need this space here filled in so we understand what pattern it is, and then we can move from that point. And if it is wave 5 at the top here in this case, then would be looking for a larger correction into the 5900 here. Will it go all the way down here? I don't know, because we're in a pretty strong thing, but I can see that there's profit taking coming in for the material sector as well. So, and also too, just in here a little bit, we've got 1, 2, 3, 4, and 5. So at minimum, we're going to get, this is minimum. So we've got 5 waves down. We're going to get a corrective pattern. We're going to get another 5 down. Okay, so that's taking us into group 2 already. As such, into the 59.80 here, the 72, the 65. So that's the main, between group 1 and group 2, this whole section here is the corrective thing. And you don't want to be in here guessing trades. If the market ever found support on 60.30, like tested support, then you can go long from that point because it separate the order flow from 6,000 here. But this space between group 2 here and group 1 here is where you can lose money. So I just allow it to mature. Don't get don't get caught up in the tide, the stormy waters there. Let me just check here on it's clear that we're getting 5 waves down now. So we've got 1 and 2 and 3 corrective pattern here because overlapping. So beautiful wave 4 and down for wave 5. So technically we'd be looking at 50-60% retracement level. I mean, but it's a little bit difficult when you're looking at large numbers because they tend to it tends to skew the orders a little bit. But if we've got this move down here, then we'll get this move to here. So that brings us into that sort of area there. So there might be just some sort of struggle into here somewhere and then 5 waves down here. So it'll be interesting to see what's past that. If this makes an A wave and a B wave and a C wave. But if we get another wave in here and this one here and we get 5 waves down, then you know that we're going to get a much bigger picture to the downside because 5 waves down from the opposite direction that we're coming from would give us here a 3-wave counter trend once again and then another 5 waves down. Okay, so if we get 3 down and we move back up above 6,000, then we know that it's corrective and you can trade along from that point. If it gives us 5 waves down, then we know that we're going to get a retest of 6,000 and then another 5 down. So 5 waves produces another 5 waves coming from in the opposite direction of the trend, and this is the trend and this is the opposite direction here, of course. And yeah, if we get 5 waves, then we get another 5 waves. So main point here is that we want to be trading long again, perhaps on the Friday, late Thursday afternoon, Friday, and then through to the Monday again. So the objective of the game now is not to get chopped up in any profits that you made. And it could be in this market, it could be in equities, it could be kind of anywhere. But anyway, we'll pick the thread up tomorrow and see where we are and see what has been produced through here. All right, thanks for tuning in. Cheers.